Our next presenter is Vext Science, and I think I described in the book a little bit. I mean, Eric's kind of been here from the start, and it's just been a real struggle because the industry's been, through all kinds of turmoil. And I have to tell you that, and I have met a lot of really great, managers over the years, but he really is one of the best that I've ever met. And he's educated me. He's taught me more about some of the accounting and the nuances of the cannabis space, whether I wanted to know it or not. And there are a lot of nuances to it. But I'm just going to tell you, I do believe this is a deep value play, and I think that Eric will step you through, why that is perhaps true. But I think the bigger thing is, I think Eric could manage a firewood business in hell. I mean, he's just a great manager. He's taught me a lot, and I think the stock is. I'm kind of. Justin talked about the bad thing to be a microcap analyst. I mean, not only that, but I'm kind of a contrarian at heart, and looking around. There's not a lot of places in the market that I think are particularly cheap, but cannabis might be one of them. So, you're up, brother.
Thank you, David. So, first, I'd like to thank David. I've done this a couple times for him, and the reason I'm here this time is some of the stuff Terry said. I do think that cannabis now has fallen 90-some%. If you look at the public sectors, most of the balance sheets are an absolute mess. But there's going to be an impetus for a change. And I do think that you'll see some rescheduling or something that makes it more attractive. So it was worth my time to now come out and say, okay, let's take a look at this sector again a little bit. So Vext, the key concept on Vext was we never made any mistakes. So we didn't do that because of some greatness or anything like that. We didn't have a lot of capital to burn, so we didn't do a lot of land grabs, and we did it more from a traditional standpoint. So the balance sheet, we own the assets, we didn't do sale lease backs, we didn't take on extraordinary financing where we're paying 18 to 19%. We didn't have those things to deal with. We expanded into Ohio, so we picked some good markets. We had the foundation in Arizona, and we looked at states that were vertical. So the key to our thing was if we grew it, we could sell it and control the distribution. We never relied on the wholesale market. And I've always been in the commodity business, and I approached this as a commodity. So that's what's happened to it. It's like any agricultural play. Every farmer overplants, overgrows, and they try to sell their product, and they're controlled on the marketplace. The only difference in this is there's no federal floor that protected you, so this thing can fall as much as it wants to. Terry hit on the hemp bill yesterday. That makes another change. That prevents some of this from going out. You're really operating within an oligopoly in the states. Excuse me. So there's your stuff. So what we did is we said we don't believe in brands, and that's contrary to most of the cannabis companies who come out and tell you that it's brands. What we identified as the brand was the retail door, because that controlled the consumer. Much like alcohol used to be years ago where you had to go to state-run stores, that's what this is. So if you own the brand in the store, you control the customer, and your bud tenders are selling to it. Most states control how close the store can be to another store that we operate in, so you're really within a geographical distance. So if you think about a 7-Eleven, they usually don't operate within a 5-mile radius of their own stores. Same idea here. So your customer, you have good retention. So we have about 80% retention of our customer base in those retail stores. That meant what we wanted to sell through the thing was what we produced, and it gave you the margin. Basically like a Sears or a private label you're doing at Kroger's or grocery stores. We operated under that model. And this is what you see, is that about 72% of the consumers are choosing based upon price. You obviously have better control on the price when you're producing your own. So this was the concept. There's no product standards. It's a subjective product. It's much like wine or something along those lines. You like what you like, but most people like what they can buy and what they can afford on a price level. So we've always operated in areas where we could control the market density of what we had, and we never wanted to be in a high-end market. People we deal with cannabis as a staple, not as a luxury. So we're not in a high-end market. People we deal with, they buy every day. Okay, so this is what's happened in the marketplace, and you can kind of get this idea, and this is what's happened in all these states. House brands are what matters. So, again, we back everything by retail, and I'm trying to go a little quick because you guys have probably seen some of this or heard some of this, but this is available at vexscience.com, this presentation. So the other thing about the retail is king is you can't really advertise in this space. So if you go to Ohio, you cannot advertise, you're limited. So when you get the person in the store, your advertisement's in the store, you sign them up with a loyalty program, you market to them, and you go in that approach. Again, commodity, low cost, quick efficiency, get them in, get them out, turn the cash. It'd be ideal if you could do kiosks, but you can't because your product's controlled, right? So ours was really on a retail first, and then we backed up the supply so that we can control it. So if you look at a lot of the cannabis companies, or you look at anything that's in the MSO standpoint, a lot of them are dependent on wholesale, and they've moved away from that model. The ones that have been really successful are like in Florida that you see, and what was going on in Florida was you had to grow what you sold. You could not go buy a wholesale market or something. If you look at Colorado, really big on wholesale when they really started going, and what happened is those people run out of, they basically are screwed because they can't control the distribution unless they go into the black market, or they went somewhere illegal with it, or they went into this synthetic that just got shut down by the Farm Bill, and then they could get into like a convenience store, or they could do a chemical derivative of it. And as Terry said, it basically was cannabis. So that's getting shut down, and it's locked them out. So again, if you're the wholesaler in a commodity, you're always the guy who gets squeezed. You're the middleman. And if you've overproduced, your product's fungible and it's going to go away, so you're going to sell it to me at the price I dictate to you because I control the door. So that was kind of the model too. Okay, this is how the markets go, and depending on the market you're in, they're going to be more mature. So most markets are developing this way, and they do this pattern. And this is where people got misled. Wholesale became really important at the start because it took a while for everybody to get established, and then they started controlling the vertical, so it looks really good, and a lot of people put a lot of money into wholesale, and that's cultivation, and that's the most capital intensive part of the business. So when they started piling money into that, and then they could start seeing that they were getting a diminishing return. And then you go to the brands, and you saw some of the national brands try to get with the celebrity brands and everything like that. There was not enough margin built into it, and it differentiates in product, and people go into a retail store and they start buying by price. And that's why you see white labels in like food and everything like that. It's the same consumer product. And then we end up with the retail door becomes the big key, and that's where everybody moves into. And depending on the state, if they control the number of retailers, that's where the value is. So Arizona cannot have more than 10% retail tied to pharmacy. So in Arizona, we all know that pharmacies are closing, like CVS, Walgreens are closing their spots. So that retail license in Arizona has a lot more value than what you would pay for it based upon like what its top line sales are or what its EBITDA is. Its multiple basically becomes paper that the license gives you the right to sell. Ohio, right now, I believe there's about 169 open in Ohio. It can go potentially to 350 based upon its population. And then you get counties that prevent you from going in and stuff like that. So once you have a door open and you own that space, it's very valuable. All right, vertical integration. You know, this is a typical slide you'll see. So this kind of fits it. Arizona, we talk about it. So from our standpoint, ours is all a cash flow business. And we were fortunate that we started in 2019 when you added margins, but if you look at any cannabis company right now, their ROI is terrible. It is absolutely pathetic. But if you look at them from a cash flow generation, a lot of them are pretty good. Terry hit on something too, is most of us have a 280E tax issue. So that comes from the fact that you cannot deduct it from a business standpoint. So anything that's engaged in the illegal part of where I sell you something and I touch that plant, I can't really deduct that from the tax return. I can roll it into the cost of goods sold, but wherever the illegal event occurs, you can't deduct it for federal purposes. So you're basically under a RICO statute, is what you're working with. Okay, Arizona, that's our stable thing. We've seen a lot of deterioration in that marketplace as the wholesale price has fallen and stuff along those lines. You operate in cannabis like a stagnation thing, where some of your input costs are going up, but your retail price is falling because of the supply side, and that's why you've seen the 90% failure and falling prices. That's why also with what Trump's wanting to do of rescheduling it, that's why we think it's going to clear up. So, and I'll tie it all together for you here in a second. This is kind of our Ohio strategy, and you see what's happening in Ohio. It went adult use, 7th most populated state, growth, etc. Controlled environment. They capped their cultivation in Ohio. Ohio was one of the smart states. Colorado, you can grow as much as you want, and people did. Arizona, cultivation. You can grow as much as you need. In Ohio right now, we have 5 dispensaries. We're going to go to 8. We've been able to locate these things around 2 hours from the distribution, from the manufacturing facilities and the cultivation. We like to operate that way because we don't want to, the product's easy to travel within the state, but you don't want to be out there along lines. So we've been able to operate there. One of the unique things, and we have this store that's opening, we, I think, are one of the unusual ones. Normally, you won't find a cannabis store that's not the anchor of where it's at. So if it's in an old strip mall or something like that, it's the anchor. Nobody's coming to that mall anymore. They put a cannabis shop. We were able to find a guy that's called Jungle Jim in Ohio. For whatever reason, an eccentric guy. He liked the idea of a cannabis shop. So he's putting a store up for us on his site that we own and operate. And his store sees 85,000 people a week that go into his retail store in Ohio. And the intersection has about 65,000 cars. We're really excited about that one. We think it's going to be the best one we've ever had. So pretty excited about that. Modular cultivation. We build the cultivation center so that we don't ever have to be dependent on wholesale. So we operate small footprint, efficient. We can add rooms as we need to, but we minimize the capital intensity of these rooms. So we scale it. Financial results, it's kind of the quarters. From a net income standpoint, most of these things lose on net income, as I said, because you've made the capital investments. It's the EBITDA that matters. Coming from the steel business, we used to do a lot of that, but it's not a great model long term. So we think that with the rescheduling, we'll be able to get a little bit of this back. This is kind of the cash flow transition for us. We used a lot of our cash back into the Ohio growth, so we funded a lot of it ourselves. Free cash flow, how we expect it to keep coming. Investments, that kind of stuff, standard. So I know we're a little bit behind, but I'm just going to flip through this real quick. So the basic gist of why cannabis is attractive right now is this industry has to consolidate. And the companies that are going to be good for consolidations are the ones that have a decent balance sheet, don't have a lot of debt that you got to take out. So a lot of the guys have leasehold improvements, and those companies are traded publicly. So what's going to happen is that leasehold improvement guy, he's got the property. If you try to consolidate that, you're trying to deal with it. There's no bankruptcy laws. There's no way to unravel these things. It's messy. There's a couple going right now that are into major restructuring and stuff like that. So David knows this because we've talked about this a lot over the years. When we did Vext with the idea that it was a acquisition target, or it could be an acquirer to be able to do roll-ups in states that made sense. We didn't go deep and go broad, so we're now at the stage where if the industry changes, this company's now at that position where something good's gonna happen to it because the industry changes and the capital structure's gonna change. Okay, so that's the story. Now, I entertain any questions anybody has.
So what are the factors that are forcing the consolidation to occur?
Just like any industry, it's been there for about 8 to 10 years. They need operating efficiencies. More people have built too much cultivation and they need distribution. So somebody that doesn't have that issue is attracted to them. Or somebody that has that can go and leverage that company because it can't service its debt. It's taking on bad debt, you might be able to renegotiate it or get something that's going to be a change to the industry. So some of them, their balance sheets are just like, you really, they've got an asset on their books that's 60 million that might be a negative 10 million. You know, so who's going to take the hit? It's got to happen. So the industry has to consolidate. The retail's the key to the thing. And they're also undervalued. You know, their breakup, like for us, we trade at a market cap somewhere around 60 million right now. And if you added up the, you know, the sum of the parts are probably 125, 130 million. Go ahead.
Obviously new news, but to what extent does the THC cap impact the industry, in particular your business?
You know, it'll change it from the standpoint of people might have to come into a store depending on what they want to do, but you're still dealing with the black market and depending on where you're at. So like in Ohio, for example, the state of Michigan's a mess. They overdid how much cultivation you could do. And somebody in Ohio versus going into our store, if you're close to the Michigan border, they drive across and they buy it and they transport it, right? So even though I can't sell across states, or somebody like Glass House or something can't sell across states, these people can. They can drive. So I think that'll be a little bit of an impact. I'm sorry.
Are you staying focused on Ohio and Arizona, or are you looking for like M&A activity outside of those two locations?
You know, right now our focus is get Ohio open. We've got that already funded. And then as we start to generate cash in excess, you'll either continue to pay down the debt that exists, which is good debt. Most of it's like sub 10 and secured with the property. And then you'll start looking at what the opportunities are. Arizona's tricky because the license in Arizona for the paper alone is worth somewhere around 10 to 11 million dollars. And it's from a return on investment when you're trading like at a 2 or 3 multiple. Every one of my shareholders would shoot me if I went and bought one of those.
At the end of Prohibition, it took them a while to knock down the black market.
Yeah.
What's it going to take to knock down the black market in
Well,
cannabis?
I don't think you'll knock it down. I think what's happening, let me give you an example. When I was a kid, believe it or not, you know, there was a black market then. You could buy, and some of you might remember this, and, you know, if we're all honest.
Well, that was the only market.
If we're all on, yes, but if we're all honest, you could buy a pound and you could take and divide it up and take and sell 3 of the quarters and keep a quarter yourself, right? And these were about, my day in Illinois, it was about 120 a pound.
Sounds a little familiar.
Right? Exactly. And you could do it for about $40 for a quarter ounce, right? Right now, you can buy an ounce in Arizona for $30, $35 a shake. So you're at the point now where you're at, you can't be cheap enough. So that's what's going to happen. The other thing that's happening too is, right, wrong, or indifferent.
But it's illegal. Why can't you knock it down? Why can't it be
Well,
illegal?
what law enforcement group's going to go out and say, hey, I got cannabis, and they pull you over, and you can't differentiate it? How are you going to say, hey, that's the cannabis you bought at the store versus you bought it from Joe on the street, right?
Right.
And then a lot of these states are just like everywhere else, is they increase the taxes, so they think they're going to get this sin tax, and they drive people to the illegal market, and they end up dropping their own excise tax. So you take the state of Arizona, for example, with an overproducing. we actually generate less tax revenue now than we did 4 years ago. I mean, it's stupid. It's the same thing that every government does. They think it's an easy way to increase tax revenue because, hey, suburban mom's going to go, oh, you're taxing cannabis. Go ahead. That's a good thing to tax, right? So they overtax it and they drop their overall revenue. Same thing on a commercial, you know. Which guy doesn't tell you, hey, raise the price. And this is always easy. I call this, the price is never too high for the spectator. And not to be insulting, a lot of investors are this way because they never operated anything or they don't operate it. Just raise your price. Well, the problem is when you raise the price, depending on the elasticity, you're going to drive less total revenue, and this product's a really low margin. We used to always laugh about this in the steel business. When I'm selling carbon steel, it's pretty cheap compared to stainless. So a guy can sell 5 truckloads of carbon steel versus what a stainless load in your trunk would generate in total revenue. A lot more activity. We do a hell of a lot of transactions in order to drive that sales dollar. So it's like a Walmart model. And that's where a lot of people made the mistake. They built these dispensaries that they thought they were going to have like Apple stores. And it's like, you know, most people want to go get their cannabis and get the hell out. They're not there looking at talking to some tech guy or something along those lines.
Not a
They wanna
destination.
Yeah, it's not a destination. You're talking about Planet 13, you know, they just closed Anaheim because they tried to build a destination. They thought it was going to be like people, and now people travel with cannabis. Now, if I was a regular user on a daily basis, I would have been on a plane today with cannabis. I guarantee you there's people going through TSA with cannabis. Anybody else? You're off duty though.
He's gambling.
He's gambling.
Yeah,
I know.
care about that.
That doesn't matter. You know, you got to be careful with how many illegal acts you're willing to do. But people do it all the time. You know. So that answers your question. Why wouldn't they shut it down? It's not worth their time. Anything else? But look at cannabis. I think, you know, you saw Safe Harbor and that. I think it's again, we are thinly traded. The nice thing about my company and why we could do this, just so you know, 65% of our shares are controlled by about 5 or 6 of us. And we have a subscription agreement. So we aren't flipping this thing or doing something stupid with it. We built it for that. And that's why David always has a hard time figuring it out, because the industry changes night and day.
Yeah, I mean, the accounting is, well, you mentioned the tax situation, the 280B, or is that right?
280E.
280E. Well, I mean, you know, what does that mean? I mean, when so you go pull up Vext, and one quarter they have a certain margin, and the next quarter the margin's lower, and it's the only company I've ever looked at where when you pull it up the next quarter's numbers, you're hoping that the margin is lower, because you know if the margin is lower, he figured out how to cram some more things into cost of goods sold so he could potentially reduce the tax liability. I mean, it's just, I think covering the whole industry is just like, Terry talked about, you know, 41 states, they all have different rules. You know, you have to cultivate before you can sell, or you can't cultivate if you sell, and it's just a nightmare from a research standpoint, but the accounting is very difficult too. I mean, when I first started this, they didn't even really technically own the business, and it's just not gotten any easier, and I think it's part of the problem with the cannabis space, now that it's starting to be viewed as just sort of a business like steel, is that I think it's really hard to ascertain what's going on with some of them. And then you have some of these external issues, and the external issues tend to be different in different jurisdictions. Arizona has a big problem, and others. Arizona has a big problem with this black market over cultivation thing. If it's coming from the black market or it doesn't really matter. There's too much of it. You know, Ohio's figured out a way to solve that problem a little bit different, but clearly the economics in Ohio are different than the economics in Arizona. And, you know, I'm sure that Eric gets tired of it. The only question I ever ask him is, well, not the only question, but the one I keep asking is, you know, when does Arizona hit the bottom? You know, because it's like catching a falling knife. I'm like, oh my goodness, what is this? But the reality is that, you know, He's managed his Arizona assets a lot better than most of them have, I can tell you that. And so I just think there's a point here where, and I think as he's sort of demonstrated, they've turned the corner, and I think it's going to start, generating a lot of cash, and the valuation is going to become more apparent to people if they're paying attention. I mean, people may not be able to connect the dots on how, why the margin's so much different, but if they look at the cash flow statement, they'll be able to see how the cash is building, which is what you probably ought to do. That's probably the best place to start anyway sometimes. So, but I just think that it's turned. I think it's deep value, and I think that probably the industry, I can't look around right now and tell you very many industries. I can't tell you very many asset classes that I don't think are overvalued. And I don't think I'm telling anybody, I don't think I'm saying something provocative. But cannabis is probably one of them. And I think part of it is because it's gone through a bunch of evolutions that, some of them are business related. Like I said, when I first started, ground zero was sort of here, and I think most of the companies we looked at first, we'd go in and kind of listen to them, and I'd think, oh my goodness, these guys are using way too much of their own product. I don't think there was a lot of business guys in this space. But now you're seeing the business guys who have taken over, and that's why you're starting to get the consolidation, because, they're just like, this is just math, it's a commodity.
It has to come on, it has to consolidate. Yeah, it is, it's groceries. Yeah, when I worked at Lano Lakes, we used to do the convenience store, it's the same thing.
One more, Nate?
Yeah, just if the changing schedule, will that streamline a lot of things?
From an operational standpoint, no. From uncertainty on the tax, yes. I think what it also does is, Terry hit on this a little bit, it'll open up some more of the regional banking. It won't be the national guys and stuff along those lines. From my perspective, it just gives some clarity. So I think he had to build the business as a commodity business. And I don't think everybody did that. I think everybody built it kind of like as a novelty, and you're doing something illegal and everything along those lines. And then you saw COVID, everybody had all this extra money and they had time, and everybody's high on it, right? So what are you gonna do? And then people are switching from alcohol and all that kind of stuff. So you have a lot of that. What always happens, and I grew up in an agricultural country, and I always tell the story. So when I was a kid, and we'd go take the bus to school, and I lived in farm country in Illinois, you'd always look at the grain belt, the grain elevators. Whatever crop had a shitload of stuff in there, like soybeans or bean or corn or whatever, you knew that was the good crop 2 years ago, because nobody ever times anything right, and that's cannabis. So every one of these guys went, let's build all this cultivation, and they went to places like Safe Harbor, or banks, or Chicago Atlantic that are more higher level, and they borrowed money and they built these cultivations at $350 to $400, and they built these large greenhouses. They grew a lot of wheat. Guess what? There's only about 10 to 12% of the population who use it. I always laugh because my stores are in urban settings, probably the best way to describe it. And they wanted to be in Scottsdale, or they wanted to be in Centennial, Colorado. Guess what? You guys might use cannabis, but you're not a good customer for me. You don't care about the price, I agree. But I have people that will come into the store 5 times during that day and buy a pre-roll 5 times. That's what you want, because that's gonna, 5 times a day.
Why don't they just buy 5?
Because they only have $5 and they're gonna go panhandle for
So they're junkies.
Well, I don't know if they're junkies. Cannabis is not an option to them. It's part of their life.
Then they're junkies.
Whatever you want to call it, but that they use cannabis, they medicate them. They tell you that they're.
Rest my case.
Exactly. Exactly. Thank you.
Eric, thanks.